Yo, what's good traders? Welcome back to another Handle Trade YouTube, right? So in today's video I decided to explain what forex trading is, right? So what are we trading in the forex industry, and some terms that you have to know, or rather terms that are used by some forex traders. Okay, so let us explain what forex trading is. Okay, so the question is, what is forex trading? Okay, so the word forex, so that term for stands for foreign, and X is stand for exchange. Okay, so in total, forex is basically a foreign exchange market, right? So forex is a foreign exchange market. So what does that mean? Okay, let's first look at what the term trading is, right? So the term trading, right, so this term here, it means that we are buying or selling financial instruments, right? So you are buying and selling financial instruments, just like saying well, when you are in a shop, right, when you go to a shop, you want to buy a soap, right? Let's say you want to buy soap. Well, you cannot buy soap without having the money to buy it, right? You need cash to buy soap, or you need whatever thing that you need to get the soap, right? So that is what we call, or that is what we mean when you say we are trading. I'm giving you that, you are giving me that, and so on, right? I'm giving you that, you are giving me that. I'm buying the soap with 50 rand or with $50, and I'm buying the soap with 50 rands, or in dollars that will be probably like $6. So I'm buying the soap with $6. So what I'm doing is I'm giving the retailer, I'm giving the retailer my money, and in return I'm getting soap, right? So that is what we call trading, right? It's basically the buying and selling of instruments. Okay, so you can either buy it, or you have it but you want to sell it, right? You no longer need it, or it's not of good value, so that means you want to get rid of it. So that is what we do in forex. We basically exchange, or we trade money in that case. Okay, and forex basically trades about $6.6 trillion. Just think about that. It's $1 trillion, not $1 million. More than 6 zeros behind the 6, right? More than 6 zeros behind the 6. Wow. But yeah, so forex trade about 6.6 trillion per day, and it is open 24/5, right? 24/5 meaning 24 hours and 5 days. So 5 days, that's from Monday to Friday. So it's open from Monday to Friday, so that means you can trade the whole week except Saturday and Sunday. The market is then closed by then, but overall it trades about 6.6 approximately 6.6 trillion a day, and is open 24/5, or 24 hours per 5 days. Okay, now what we trade in forex is called a currency pair, right? So you might have heard about the word foreign, right? There's a foreigner in our city. When we say foreigner, it means someone coming from outside your country. Someone coming from outside your country to your country, right? So like, for instance, if I'm from I'm from the UK, then I'm going to the United States, then I'm a foreigner to the United States, right? So think about that, because you will need that again when we going deep in what Forex is, right? So you are from the UK and I'm going to the United, then I am considered a foreigner in the United States, right? I'm from US going to South Africa, then I am a foreigner in South Africa, right? So that is the term foreigner. You basically, you do not reside in that country. You in the country, right? You are not from the country, right? You're coming from another country to another country, right? Like from the United States to South Africa, from UK to whatever country that you call it, but that's foreign. And so in Forex you trade what we call currency pairs. Okay, so a currency is basically what we use to buy your shoes, your pants, your laptop, your phone, and so on, right? Is what you use to buy your needs, right? Like to buy my phone, I use rands. In the United States, to buy in order for you to buy a phone, you need to use you need to use dollars, right? I cannot go to the United States with my rands and buy a cell phone with rands, right? It doesn't work like that. So in the United States they use dollars, in South Africa they use ZAR, in South Africa they use rands, in India they use rupee, and so on, right? So these are examples of currency pairs. You have the dollar, you have the euro, you have a pound, and others like your Indian rupee, your British pound, your Japanese yen, your United States dollar, and so on. There are many more, right? There are a lot, and we will discuss about them later on this video. Okay, so basically a currency is what you use to buy your needs in a certain country, right? So for instance, to buy clothes in the United States, you need to buy them using dollars, right? If you want to buy clothes in the Eurozone, you have to buy them using euro, right? If you want to buy a car in South Africa, you have to buy a car using rands, right? Not the other way around. You cannot come to South Africa and buy using your dollars, right? You have to exchange your dollars into rands, and that is what you mean by foreign exchange, right? You are exchanging your currency to a respective currency, right? Let's understand that deep, right? What a currency pair is. Okay, so like the example that I've made, when you travel from one country to another, you cannot use the same currency that you used in your country at another country, right? I hope that makes sense, right? So if I am from South Africa, right? So if I'm from South Africa going to the United States, right? Going to the United States, then I cannot use my rand in the United States, right? I cannot go to a local shop and use my rand in the United States, right? So that means I have to change. So that means that I have to change my rand I have to change my rand into the United dollar. Into the United States dollar, so that I can be able to then buy in the United States using dollars, right? So yeah, so to do that, right, you have to go to a to the nearest banks to exchange. But with forex trading, you don't have to go to the bank to exchange your rand into the dollars. You can just do it online, right? So that is what trading is, right? You're basically exchanging your currency to another currency, but you're doing that online, right? You're doing that online against other traders, of course. Okay, so like the example that I've given you, if you are from the United States going to the Eurozone, then you will have to change your US dollar into or to the euro, so that you'll be able to buy in euros, right? Or in the euro, right? In the Eurozone. Okay, so one currency is always traded with respect to another. That is why we call them a pair, right? So we call them a pair because there's only two of them, right? You either exchanging your rand to the dollars, so they're exchanging dollars to rands. You can exchange your dollars to the euro, your rand to your euro, and so on, right? There are many more, but I won't mention all of them. But there are many more currencies, right? But overall, when we say a pair, then we mean two pairs, right? We're talking about two pairs. So in that case, I can be talking about the United States dollar and the ZAR, right? And the ZAR. So that is what we call a currency pair. This here is what we call a currency pair, right? But let's look at that on our next slide, right? Let's look at this currency pair here, which is a Euro USD, right? Let's look at the Euro USD. So okay, let me just change that to blue or black. There you go. So let's look at this Euro USD, right? So the euro is the first currency in a currency pair. As you can see, it's written Euro USD, right? So these are two currencies, right? This is your euro and this is your USD. Okay, so now the euro, which is this one here, is the first currency in a currency pair, and that is what we call a base currency, right? And then the United States dollar is the second currency in a currency pair, and we call that the quote, right? We call that the quote currency, right? So this is a typical example of it. You have your base and your quote, right? This is how you're going to see a currency pair on a chart, on your MT4, MT5, or your trading view, right? You will only see these two, right? You will only see two countries that exchange rates, of course. So the first one is your base, and the second one is what you call the quote. Okay, so now what does each currency tell us? This is very important when we're looking at the fundamentals, the fundamentals of the factors that depreciate or appreciate a currency. Okay, so what happens if a base currency rises in value, right? So remember we were looking at Euro USD, right? So these things, they change over time, right? The prices of a euro versus dollar, it changes over time. It's not the same, it keeps on changing, right? So 1 euro, it's about $1.07, right? and 1 cent, right? So 1 euro is about $1 and 0.7 cents, right? And it can changes all the time. 1 euro again becomes $0.8, right, based on the dollar strength or dollar weakness, right? So if a base currency rises in value, so meaning if it rises in value or it becomes stronger than the dollar, then what will happen? What does that mean to us? So that means that the whole pair will move to the upside, or the chart or the graph. I'm just going to say graph for now, since I'm assuming that most of you are beginner traders. So I'm just going to say graph, or the graph that you see on MT4, MT5 or TradingView. Those red and blue bars that you see there, they will go to the upside. They will do that, right? This happens because the base currency rise in value. Okay, so now what happens when it depreciates or decreases in value? So when the base currency depreciates or decrease in value, or it becomes weaker than the dollar, then the whole pair will go down, right? Or rather it will move downwards, or it will decline. Okay, so but you will be more familiar with the terms when we progress on the next stages, right? So but if the if the base currency decrease in value, then the whole pair will decrease, and if the base currency rises in value, then the whole pair will move to the upside. Similarly, if the quote currency rises, what do you think will happen? So if the quote currency rises in value, then it will happen, the opposite will happen to this thing here, right? The opposite will happen. So if the quote rises, then the whole pair will decrease, right? And if the quote currency decrease, then the whole pair will increase, right? So the opposite happen to the other currency, right? The opposite happens to the other currencies, right? So if your base currency rises in value, then the whole pair will increase or push to the upside. And then if your quote currency rises in value, the whole pair will decrease, right? If your base currency decrease, now if your base currency decrease in value, then the whole pair will come down. And if the quote currency decrease in value, then the pair will go to the upside. Okay, so I hope that makes sense. If it does not, then comment down below. I'll make another video on currency pairs. Okay, now these are some examples of currencies and their respective countries, right? So there you have the US dollar. So that's a currency, right? The dollar, that's a currency, and the country will be the United States, and it is abbreviated as USD, as you have seen on our prior slides, right? It's abbreviated as USD. And then you have the yen, which is the Japanese, which is JPY. You have your rand, which is South Africa, which is in ZAR. You have the Swiss franc, which is Switzerland, which is CHF. And then you have the euro, which is the country is the eurozone, which is EUR, right? And there are many more, right? Of course I couldn't write all of them down, but there are many more. There are a lot of them that you can think of, right? Like Mexico, India, and so on, right? So you can see that on a currency pair these the countries and the currencies are abbreviated to 3 letters, right? Abbreviated to 3 letters. Now, the first 2 letters, they indicate the country, right? So like here, this here, let me just change the color there. Okay, there you go. Like this one here, right? You can see it says USD, right? There are 3 letters there. The first 2 letters, they indicate the country, right? So in that case, USD, US will stand for United States. Okay, and then if you look at JPY, this color is let me just change the color. Let's take red, right? And then JPY, right? So JPY, JP will stand for Japanese, and then ZA will stand for South Africa. Don't ask me why is there Z there, and then others I can't explain, right? Like that one, that's yeah, that's how it is. And then Swaziland, it's CH, and then Eurozone, which is EU, right? And then the last letter stand for the currency, right? Like the D stand for a dollar, the Y stand for the yen, the R stand for rand, the F stand for the franc or Swiss franc, and then the R for the euro, right? I hope that makes sense. And yeah, there are many more that you can think about. Do your research, and yeah, okay. And then there are 3 types of pairs, or rather of pairs that you can trade in Forex, in the Forex industry, right? So there are 3 types of pairs that you can trade in the Forex industry. We have what we call the majors, or the major pairs. We have the crosses and the exotic pairs. Okay, so let's talk about the major pairs first. So the major pairs are the ones that are mostly traded by all traders, right? So they are mostly traded because they have higher liquidity. So this is again another word that you will hear most traders use, liquidity. Liquidity is just another name for money, right? So it means that there's a lot of money with these pairs here, right? The major pairs, there's a lot of money, and the major pairs consist of the United States dollar, right? All the pairs that have the United States dollars, major pairs. Well, not all of them, but these are some examples of them, like your Euro USD, your GBP USD, your USD JPY, your USD Swiss franc, and your Australian dollar versus the USD right? So these are some examples of major pairs, right? So as a beginner, it is advised for you to trade these pairs, right? These major pairs. And then as you progress and see your progression, then you can move on to crosses and exotic pairs, right? Now let's look at the crosses, right? So crosses are semi-traded, right? They're not mostly traded, but they are semi-traded. So these includes so you trade crosses when the United dollar pairs or your major pairs are not analyzable, right? If you cannot analyze your major pairs, then you can move on to your crosses, right? And then you can move on to your crosses. The crosses are the semi-traded pairs. So these pairs, like, they do not include USD in them, right? Or rather on them, right? So you trade these pairs when the USD is not analyzable, right? So when you cannot analyze your major pairs, then you can trade your crosses, right? So sometimes we trade crosses when there are events that are about to come out with the US, or rather the United States, right? So when there are events that we cannot trade, then we leave the major pairs alone and we focus on the crosses. Events such as your NFPs and your CPIs and your interest rates, right? Because so we'll talk about that later on when we look at some fundamentals, right? So the examples of crosses include like your Euro JPP, your Euro JPY, your Swiss franc versus the yen, the pound versus the Australian dollar. Then you have your euro versus the NZD or your New Zealand dollar. Okay, and then we have the exotic pairs, right? So these ones, stay away from these ones because they have low liquidity, right? They do not have a lot of money. There's a lot of spread or higher spread. Supposed to be spread, not spare, right? So there's a lot of spread, or rather high spread, and they include developing countries, right? So do not trade these pairs. So examples include like your lira, Turkish lira, your ZAR, your Brazil, right? So these types of pairs, stay away from them as a beginner, right? So it's advised to trade your major pairs, right? Okay, now let's move on to a pip, right? A pip, or what we call a percentage in point, right? So what is a percentage in point, or the pip? So a percentage in point is that number that, or rather those numbers that you see on the right hand side if you're using TradingView as a platform. Then but you will look at the chart, or rather the graph that you see there. But you look at the graph that you see when you're trading. But the numbers that are on the right hand side, they are what we call the pips, right? Pip meaning percentage in point, right? Excuse me. So a pip represents a change of 0.0001 in the exchange rate, right? So a pip represents a change of 0.0001 in exchange rate. So I'll explain that when you look at some numbers, or when you look at some math, just a little bit of math, not something major, but so a pip represents a price of a quote currency against the base currency, right? Again, if you do not understand the whole thing, I'll explain it using this example here, right? So this is a number that you normally see on the right hand side, this number here, or something that looks like that, right? Those numbers that you see on the right hand side of the screen on your trading view. Okay, so this is what we call a pip. Now a pip, basically your fourth digit after a decimal is what we call a pip, right? Your fourth digit after a decimal is what we call a pip. Now this is a decimal, so if I go in 1, 2, 3, 4, this here is my unit, right? So my unit can be 1, 2 up to 9, right? That's my unit. And then the number after that, that's my tens, right? So my tens, that would be 10, 11, and so on until 99. Okay, and the number after that, that's my 100. That's my 100, right? That will be from 100, 101, and so on until 999. And then this number here will be your thousands, right? Your thousands, which will be 1000, 1001, and so on until 999, right? So this might be a little bit of confusing, but we'll look at an activity and how to calculate the pip, right? We'll look at how to calculate the pip. But overall, the most important thing to note is that your fourth digit after your decimal, that is your unit, right? That's your pip value, right? So that is your unit. This is your 10, this is your 100, right? That's your 100, and that's your thousands, right? It's rare for the market to move 1,000 pips, but yeah, but that's how a quote is quoted, right? That's a number that you see on the screen, right? So the fourth number or digit after a decimal, that's your unit, and then going to the left or going that side, it becomes 10, 100,000, and 10,000, right? Still 1,000 but 10,000. And this one here is what we call our pipette, right? This one is called a pipette. Now pipette, it works like time, right? It works like time, just like if I am on 4 o'clock, right? So it will take 60 seconds for us to reach 16.01. it will take 16 seconds to reach 16.02. it will take 16 seconds to take 60 seconds to reach 16.03, right? So that's how a pipette works. It's basically 1/10 of your unit, right? So your pipette is 1/10 of a unit, right? Not 1/10, but yeah, it's actually 1/10. So you will say 1/10 times the 2, right, which is about 0.2 pips. Okay, so basically your pipette is 1/10 of the unit. The unit is basically the fourth number after the decimal, and then moving to the left, you'll get your 10, 100, 1,000, 10,000, right? That's easy. If it's not easy, then we're gonna look at an example here, right? Let's say you have this currency pair here, euro versus the United States. Okay, so and then this here is our quote, so our quoted value. And by the way, to read this, it reads as follows. We say for every 1 euro, or rather not for every, but 1 euro is about 1.07987 dollars, right? So 1 euro is 1.07987 dollars, right? So your base currency is always 1, right? Does not change, right? And your quote currency is the number that is quoted on the right hand side of your chart, right? The numbers that you see there, those are your quote, right? So that indicates how many, or rather how much is 1 euro, right? So in that case, that will mean I have to, in order for me to have or to buy United States, in order for me to buy in order for me to buy 1 euro, then I have to have that amount of dollars, right? In order for me to buy 1 euro, I have to have that amount of dollars. And then in order for me to buy let's say 2 euro, how many dollars do I need? Well, it will be 2 times 1.07987. That's about 2.15974, right? And so on. If I want 3 euro, right, if I want 3 euro, then I'm gonna times this number by 3. If I want 4, then I'll times it by 4, and so on. But what if I want $1, right? So that means I have to divide this number by this one here, right? So it will be 1 divided by 1.07987. so that means it will be 0.926, right? It will be 0.926. so that means that $1 will be equal to 0.926 euros, right? And that's how we read the currency pair. Okay, so let's look at an activity here. Now that you know how to read a currency pair, let's look at an activity here. So if we had this pair here, and let's say 1 euro is about that amount of dollars, for example, right? So how many pips did EU, right? So EU stand for euro versus the dollar. So I just took the first letter of the currency pair. You'll hear that when forex traders say that they will use they will just take one letter from each from a currency, and then they will be like, yeah, EU, are you trading the EU? When you say you're trading the EU, then we're saying euro versus the dollar. If I'm saying UJ, then it's United States versus the Japanese. Then it's GU, I'm saying the British pound versus the dollar, and so on. If I say NU, then it's the New Zealand dollar versus the New Zealand dollar versus the United States dollar, and so on, right? We just took the first letters here of the currency pair, right? So how many pips did EU move if it is at, these are numbers here, right? So you can take your time and calculate how many pips did it move, and did it move to the downside or to the upside. Okay, I'll give you about 2 seconds. 1, 2, here you go. So let's see how we can calculate this. So to calculate how many pips did EU move, we'll say 1.07987 minus 1.07976, and the answer that you get, you just plug that on a calculator. Can use a phone calculator. So it's 1.7987 minus 1.07976, and you get about 0.00011. So correct me there if I'm wrong, but this is what I'm getting on my calculator. And then we know that I asked you how many pips did EU move, so I want the number of pips. So I noticed that I'm going 4 decimals after, I'm going 4 digit after decimal. So this is my decimal. If it would be 1, 2, 3, 4, so that's my unit. So that means that that is 1. So these are all zeros, so I don't really care about them. So I want the numbers. So that means that I've moved 1.1 pips, right? So the fact that I got a positive, right, I got a positive sign, that means that the pair moved to the upside, right? It went up by 1.1 pips, right? Hope that makes sense. I mean, yeah, it went up by 1.1 pips. Okay, let me see. From 8 to 7. From 8 to 7, no, it actually went down. It actually went down by 1.1 pips, right? Because from 8 to 7, that's a decrease, right? That's a decrease in value. So that means that the dollar decreased, or the euro. So if the dollar decreased, then you should expect the price to go to the upside, right? So hence why I'm saying the move went to the upside, or the whole pair gained momentum, and we saw our chart pushing to the upside, right? So our chart pushed to the upside. So from 1.07987 to 1.07976, then it moved that amount of pips. So what does it mean to us? It means that the dollar, it lost momentum, right? The dollar became weak. It moved from 8 to 7 and 6, right? So it lost some momentum, and hence the euro, it gained momentum than the dollar, right? So hence it moved to the upside. Okay, and then what about this one here? How many pips is that? So it would be 1.07987 minus 1.07771. That's about so if you say 1.07987 minus 1.07771, that's about 0.00216. So how many pips did it move? Well, if we go 4 digits after the decimal, this is my decimal, then 1 2 3 4, that's my unit. So that's 1, that's my tens, so that's 20, then this is 1/10 of that, so that's 6. So that means that the pair moved 21.6 pips, right? So that's about 21.6 pips. So this is very important as you when you calculate, rather we'll talk about that later on, but this one is very important to know your risk and your reward, but we'll look at that later on. But yeah, so this is how you calculate your pip value. You just subtract the exchange rate with you subtract your exchange rate, or rather the exchange rate, I mean by exchange rate I mean where the price was with where the price is currently. So the price was there, and then it moved to this point, right? So you want that distance, or the difference between the two, right? What about this one here? It will be 1.07987 minus 1.07983, right? So let's see how much that is. So 7983, so that's about 0.00004, right? So you notice that this one had moved 0.4 pips, right? So I hope that you understand how to calculate a pip, and you know what a pip is, right? If you do not know what a pip is, then comment down below, then I'll do another separate videos and some more activities on how to calculate a pip value. Okay, so okay, let me just remove this. So we call these things points, right? So we call these things points, like 1.1 pips. You say the pair moved 1.1 points. Okay, the pair moved about 11 points. In that case we'll say 11 points, but not 1.1. You will say 11 points. here you say 216 points. So you'll say the pair moved 216 points, right? And yeah, let's move on and let's look at the JPY pairs. So you might have seen that the JPYs are rounded off to the nearest 3 decimal. So you see they are different from this one. This one is rounded off to the nearest 5 decimal, and the JPY pairs are rounded off to the nearest 3 decimals, right? Like this one here, there's an example, right? So you have this one here, which is a non-JPY pair, or a pair that does not include JPY. You can see that it's rounded off to the 5 decimal. But if you look at the pair that includes JPY, then it's rounded off to the nearest 3 decimal. Yeah, this one is supposed to be 3, because in the chart you will see 3, right? But here there is 2, so yeah, let's assume there's 0 there, right? So yeah, you can see that this one here is rounded off to nearest 3 decimal, and this one is rounded off to nearest 5 decimals. Okay, so that means that JPY has another way, or rather have its own formula to calculate the pip, right? Yeah, so with JPY, what happens, let's look at an activity here. You still read it as the same, it does not change, right? So you'll say if $1 is 113.823 yen, alright, sorry about that. So you'll say $1 is equal to 113.823 yen, right? So that's how you read your base, that's how you read your currency pair and your pip, right? So $1 is equal to that amount of yens. Okay, so in order for you to calculate the yen, so you're basically going to say, after a decimal, I'm going to move 2 units, right? 2 units to the 2 units after a decimal, that's my unit. So it's the same, nothing changes. It's just that in this case you're going 2 units. For the first one you go 4. For non-JPY pairs you go 4 units, and for JPY pairs you go 2 units, right? So 2 units, that's my unit, that's my 10, that's my 100, that's my 1000, and that's my 10,000. And this one, of course, that's my pipette, right? That's my pipette. Okay, so still the same, does not change, calculated using the same formula, right? So here again, go ahead and try these on your own and see whether you are able to calculate the pip difference, or rather the amount of pip a pair move, right? So if a pip was running at, if the exchange rate was that and it moved to this one, if the exchange rate was 13, or rather 113.823, and then it moved to 113.70, or rather 0.770, then how many pips did it fall or rise, right? So again, we'll say the same thing here. It would be 113.823 minus 113.770. If you plug that in your calculator, or on your calculator, you should get about you should get 0.053, right? So I'm gonna go 2 units after a decimal, that's 1, 2, that's my tens, so that's 5. Here it's 0, so I don't have to, I'm gonna ignore that, and this is 3, so that's 5.3. Pipette is still 1/10 of the unit, of the unit, so it will be 1/10 times 3, which is 0.3. Hence why there's a comma that indicates that. And then if you add 5 plus 0.3, you will get 5.3. That's the amount of pips the pair moved, right? That's the amount of pips the pair moved. Okay, so now let's move on to the next one here. 113.823 minus 113.312. If you plug that on your calculator, you will get 0.5. right? You get 0.5 on 1. So here again, two decimals, two digits. After a decimal, I'm gonna move 2 digits. That's 1, that's 2, that's my unit, and that's my tens, right? So that would be 50. So tens 50, units 1 plus 1/10 of that, which is that. So that's 50 plus 1 plus 0.1, that is 51. That is about 51.1 pips. So that means that the currency pair moved about 51.1 pips. Okay, so these are very important. These are very important when you're calculating the amount that you're going to lose per how many pips, I don't know, but per pip, right? So let's look at this example here. So it will be 113.8323 minus 114.743, right? So go ahead and try that on your own. I'll give you about 5 seconds. 1, 2, 3, 4, 5. There you go. So you should have gotten negative 0.92. So what does that mean? So it means that the currency, or rather the pair, it moved. If you go a decimal, if you go two digits after a decimal, 1, 2, that's my unit, so that's 2, plus that's my tens. So in order for that to be a 10, it has to be 90. So 90 plus 2, that's 92. So that means that the the currency moved about 92 pips, right? The currency moved about 92 pips. Okay, I hope that makes sense. And yeah, let's see what will happen then. Okay, so you're probably wondering why we're having a negative with this one and not a negative with this one. So this formula here that I'm giving you is the way of calculating, or an easier way of calculating a pip, right? Leaving the negative and the positive signs alone. This is how you calculate a pip, right? I'll explain it when you look at some charts on how they depreciate, what happens when the other ones increase, when the other one depreciate, and when the other one appreciate, right? So for now, just know how to calculate the pip value. Write it down in your notes, and yeah, we'll look at that because this one is very important in forex trading or any other financial instruments in that case, right? And yeah, so let's go on to a lot size, right? Again, another interesting or very important topic that you should know. What is a lot size? So a lot size is a unit, right? It's a unit, or rather the amount of the asset you wish to trade, right? It can be anything. It can be a euro USD, it can be euro USD, it can be gold, it can be indices, your Nasdaq, whatever you want to trade, right? So it's basically the unit of asset you want to trade. Okay, so let me just remove that. So these are the examples of your lot sizes. These ones are for the United States, of course. These are in dollars, so you can research on the other currencies, but this one because I'm assuming that most of you are beginners, so you will be trading your major pairs. So this one is what you have to know if you'll be trading major pairs or trading gold and whatsoever, right? So we have what we call a standard lot size. So a standard lot size is about one, right? Standard lot size is one lot size, which is 100,000 units, right? So I'll explain what that means. Then you have a mini lot size, which is 0.1, which is 10,000 units, and then you have a micro, which is 0.01, which is 1,000, and you have a nano, right? So a nano is very rare, so I don't think you'll see this anywhere, unless if you're trading like your volatility 75 and those other instruments like volatility 75 here, and then you will see this one here. But if you're trading currency pairs, then these are the three that you're most likely to trade with, of course, that you will see, right? One lot size 0.01, 0.1 and 0.01 lot size, right? And yeah, so let's see what they mean, right? So in order for you to open a trade, remember in forex trading we're buying or we are selling, right? So in order for you to buy, to press that buy button or the sell button, you have to indicate your lot size, right? You have to indicate a lot size that you wish to trade, right? I'll explain that in a bit, but the smallest lot size is 0.01. so you also have like 0.02, 0.03 and so on. You have 0.17 and so on, right? But then the smallest or the minimum is 0.01 lot size. You cannot go below this lot size here. So and then your maximum, I don't know what's your maximum, haven't tested that out, but you need a lot of money to trade. Like I've seen people trading 100 lot sizes, 10,000 lot sizes, but yeah. And then we will look at these on a demo account, and we will see how they affect our position, right? Or how they affect our money, how we can lose or how we can win, and so on. Of course, you might think you might heard of that. The higher the lot size, the higher the chances of you blowing or losing all your income or your money. Or the higher the lot size, of course, it can make you a lot of money in couples of seconds, right? So the higher the lot size, you can make a lot of money, but also you can lose a lot of money from using a bigger lot size, and vice versa. Of course, if you use a small lot size, then you'll be making small amounts, and then of course you'll be losing small amounts of your income. Okay, so this is a formula that you can use to calculate how much you are winning or losing per unit or per pip, right? Remember we did pips, so this is how you can calculate how much you're winning or losing per pip. It's basically a point, the point or your pip, how many pips you are running, right? Divided by the exchange rate. Exchange rate is where the price is at currently, times your unit lot size. So your unit lot size is the 10,000, 100,000, or whatever lot size you'll be using. So if you're using 1.17, so you know that's about 100 lot size, right? You know this is about 10,000 lot size, and you know this one is about you know that 0.01 is about 1,000 units. So that means that 0.07 will be 7,000 units. So if you add them up, 1.17 will be 110 7,000. So it will be 17,000. 117,000, right? So that is the amount of that is a unit that you will need on your account to trade this amount of lot size. Okay, so yeah, so that's your unit lot size. Okay, so this is the formula that you use to calculate how much you make or lose per unit or per pip. Okay, let's look at an example here. Right, so let's say you're trading one lot size and we are trading, let's say you're trading EU or Euro USD. Let's say you're trading Euro USD and the current exchange rate is about let's say you sold the Euro USD, right, and the current exchange rate is about that amount, right? And per pip, to calculate how much you're going to make per pip if you use one lot size, so you know that per pip, one pip is that amount, right? So it's 0.0001. so you say 0.0001, remember that's one pip, that's a unit, right? So that's unit, and then times the lot size unit. You know that the unit for one lot size is 100,000, right? So that means that every pip that the price move, you will be losing or winning or making $9, about $9, right? I hope that makes sense, right? So for every pip that the price moves, you will be making $9. That's a lot, right? $9. You will think, remember the price, like your major pairs, they are too volatile or have a lot of money, they have a lot of liquidity in them, right? So there's a lot of liquidity or there's a lot of money. So Euro USD can move about 10 pips, can move about 70 pips in a day. Just think about that, how much you are making per day if you have traded one lot size. So if per pip, if you are trading Euro USD on a specific day and you used a 70, or rather you trade it, right, and per pip you are losing or winning that amount, then if I trade, let's say 70 pips, how much will I make, right? So if one pip is about 9.28, then how much is 70 pips, right? So how much is 70 pips? So 70 pips will be 70 times 9.28. So if you are trading Euro USD on a specific day and it moved 70 pips, that means that you would have made $649.6, right? So if you have, if of course the price moved in your direction, you are going to make that amount in one trade, right? Of course you can also lose, right? You can also lose, right? So if you are to lose, you are going to lose that same amount, right? If the price moved against you 70 pips, then you'll be losing $649.6, right? So that's the reality of trading. Yeah, so that's the reality of trading you do make money, and when you do make money, you make a lot of it, depending on the lot size that you'll be using and how much you have on your account, of course. But again, you can lose a lot of money, right? You can lose a lot of money in that case, right? So yeah, that is how you calculate how much you can make or lose per pip, right? And yeah, let's look at using a 0.01 lot size. So if you are using a 0.01 lot size, then per pip you are going to lose about, you are going to make about 0.93 profit, if of course the currency go in your favor. But if it goes against you, you're going to lose $0.93 per pip, right? Per pip. So if the same happened, let's say Euro USD moved 70 pips in your favor, then it will be 70 times 0.93, then you would have made $65 or $65.1 in a single trade. And if of course it moved against you, you are going to lose $65.1 in that case, right? Because if, let's say, you wanted to calculate how much you're going to make per 9 pips, then you'll change the 1 to a 9, right? You'll change the 9 to you will change that 1 to a 9, and then you do the same calculation, right? So it will be, let me just put this on my calculator, 895, and then times 1,000 or 10,000. So that means every 9 pip you'll be making about $8.34, right? $8.34. So if it moves 70, then I'll divide it by 9. So 70 divided by 9, that's about 7.7 or 7.7 recurring. So if I times that by 7.7, then it's still the same profit, right? Still the same profit, 65 if you round it off, or 64.87 in that case, right? So that's how much you are going to make per pip, or per 9 pip. In this case, per 9 pip. In this one, per 1 pip, you divide that by 1, then you get 70 still, and then you're going to times that by 70, right? So that's how you calculate the amount of pips, rather how much you're going to make, how much you're going to make or lose per pip, so that you will be able to manage your risk and know how much you are willing to make or willing to lose in a day, in a month, in a week, in a year, or every 2 weeks, doesn't matter. But this will help you to manage your risk and have a goal of what you want, right? Have a goal of what you want. Okay, so now that you know how much you will be making or losing per pip, let's move on to a leverage, right? So you might be asking, where in the hell will sorry about the language, but you might be asking, where in the hell will I get $10,000 to trade, right? Since we said that you need 10,000, you need 10,000 to trade that amount, and the minimum is 0.01, which is also 10,000, which is a lot, right? I mean, this is in dollars. If you round it off in rands, that's about 10k, right? Or 11,000. So that's about 11,000. Yeah, I think, yeah, that's about 11,000. That's about 11,000 rands in Cape Town, I mean in South Africa. So yeah, so let me just go back to that. So with leverage, so yeah, in that case you might be wondering where you will be getting that amount of rand or US dollars to trade 0.01, right? I mean, if 0.01 is the minimum lot size, and it also requires about $1,000. If it requires $1,000, which is approximately 10,700 rands, I don't know, in South Africa, then where in the hell will I get that amount if I only have $10, right? Okay, so we have what we call a leverage. So a leverage is what boosts your money, or rather is the money okay, so let me just rephrase, right? So we can actually trade with $1 rather than $10. I'm gonna make it more rather small, right? So because you do have other people that don't have $1, I mean $10, right? So but to get a good trade, you need about $100, right, in your account to trade like good trades and keep a risk and be able to manage your trades. You need about $100. With a $1 account, how would you be able to trade a 0.01 lot size? If I need $1,000, if I need $1,000 but I have $1, how will I be able to trade 0.01 lot size? So we can actually trade a 0.01 lot size with $1, or at least other brokers will allow you to do that, right? So brokers have their minimum deposits, right? So I'll explain what a broker is later on, but brokers have their minimum deposits, right? So you do have brokers like your FPS and your headway brokers that use that have a minimum of $1. I mean, I think FPS is $5. Yeah, I think FPS is $5. Your headway broker is about $1, right? And yeah, so headway broker is about $1. The minimum deposit is $1. So yeah, so other brokers will allow you to do that, and others of course have higher deposit. Yeah, they have higher minimum deposits, right? So we can thank the leverage that we do not need millions of dollars to trade lot sizes, rather to trade to open a trade, right? To open a trade, we don't need millions of dollars to open a trade, right? It costs thousands of dollars to open a trade, but we don't actually need thousands of dollars to open a trade, right? Thanks to leverage, of course. So what is leverage? So in that case of that case of trading, in that case of depositing $1, right, to trade 0.01 lot size. So to trade 0.01 lot size, you need $10. I mean, you need $1,000, but you only have $1, right? So that means you need about $999. So that means that you need $999 in order for you to open a trade, right? So how would you get that, right? So you're gonna explain what leverage is, of course, and yeah, so and the advantage and negative aspect of it, of course. So like if you only have, let's say you have $50. I'm gonna come back to this $1 here since I wrote $50 here. So if you have $50 and you want to trade 0.1 lot size, so a 0.1 lot size is 10,000 units or $10,000, right? So to trade 0.1 lot size, you need 10,000 units on your trading account. Okay, so let's say you chose a 1 to 1000 leverage, right? With a 1 to 1000 leverage, it allows you to open a 0.1 lot size. How is that, right? So you're gonna take, so basically leverage is a borrowed money from your broker, right? Not broke, but broker. So your broker gives you or lends you the money. We'll just say borrows you for now, because that's the same as borrowing, but we'll say the broker will borrow you some money to trade or to open the lot size that you wish, right? So since I had $50 and I wanted to open a 0.1 lot size, and I chose a 1 to 1000, not 10,000. Want to just move the 0 there. Okay, so okay, let me just do this. Yeah, let me just remove the 0 here. Okay, so I chose, or rather you chose, a 1 to 1000 leverage. So what does a 1 to 1000 leverage mean? So it means that your amount, or rather the money that you had, let's say $50, the money that you had will be times by what? By 1000, right? So the money that you had will be times by 1000. So if you times 50, the money that you have, by with your leverage, so that's a leverage, and that's the amount that you had, right? So it's 50 times 1000, that's about 50,000, or rather that is 50,000. So that is what you will have on your account, right? Well, it won't show that you have $50. I mean, it won't show that you have $50,000. It will show that you have $50, right? Because that's how much you have. But in a nutshell, you have $50 worth of units. So that means that I can trade 0.1 lot size. Actually, I can trade 5 0.1 lot size. So that means I can open 5 trades of 0.1 lot size using my $50, thanks to leverage, right? Thanks to leverage, I can do that, right? So with a $1 account, how much would you need to trade that 0.01 lot size? Well, you need about 1,000. So that means that you have to choose 1 to 1,000 again to trade only 0.01 lot size. So again, if I have 1,000, I mean, if I have $1, then I'm gonna times it with my leverage. So it's 1 times 1,000, which is the leverage I've chosen. Then 1 times 1,000, that's 1,000. So that means I have 1,000 of buying power, right? So this is my buying power. So I have that amount of dollars that I could use to buy, right, my 0.1 lot size. Yeah, so that means that I can open one trade of 0.01 with only $1, right? Hope that makes sense. But we will look at virtual or rather demo account on how that works. Okay, so in that case, you have $50, right? So you have $50. Now that you have $50, that means that now I can trade my 0.1 lot size. And nice part about that is I can trade 5 of them, right? I can trade 5 0.1 lot size. So with 0.5, so that means that I can trade 0.5 lot size, right? I can trade 0.5 lot size. So what does that mean, right? So it means that your broker borrowed you or lended you this amount of dollars, right? If your broker lended you $49,950 to trade with, right? That's the amount that your broker borrowed you, right? Of course, you cannot withdraw that amount on your account. It will be showing $50, but the broker will allow you to open your broker will allow you to open 0.5 lot sizes because of the buying power that you have, or your leverage that you have chosen. Okay, so leverages may go up to 1 to 3,000, actually 1 to 5,000, right? And there are some other brokers that have 1:1 unlimited, like your XNES, I think. Yes, like XNES have 1:2 unlimited, which is super risky to do that. So I don't know how that's going to work. 1:2 unlimited. So that means that with your $1 account, you can open a 0.1. You can also open a 1 lot size. But note, in just one pip, in just a one movement, your account is gone, or you have lost all your amount, right? In just one wrong move, your account is gone, right? So that's super risky, right? Yeah, that's super risky, right? So of course, this one again, let me just this one again here, the higher, so the higher the higher the lots, the higher the leverage, right? The higher the leverage, the higher the chances of what, of losing, or rather, the higher the leverage, the higher the chances of making a ridiculous amount of money, right? Can you imagine with a $1 account? So with a $1 account, if I traded one lot size, then I'm making about $9 if the trade went in my favor, right? I'm making about 9.8 something dollars if the trade went against me. I mean, if the trade went in my favor, then in one pip, right, per pip, I'll be making that amount with just only $1, right? That's the ridiculous, right? So that means you have made about let me see, 9.8 times 100. That means that you have made about 980% of your income, right? So that's ridiculous, right? And then if it went like 70 pips again, you would have made 600 and something, 640 something dollars in only $1, right? But that is unrealistic. Although it can happen that you make that amount in just $1. Open a trade and pray that it goes in your favor, right? Because in just one wrong move, then your account is blown, right? And of course, there are some risks to it. With a higher leverage, the higher chance of blowing your money, right? So if you over leverage your account, by over leveraging, I mean that you go, let's say here you had $50, right? You had $50, right? You had $50, right? And then you have 50,000 of buying power, right? So if you trade 0.5 lot size, then that's over leveraging, right? You have over leveraged your account in case where like you cannot open new positions, and yeah, if one wrong move happens, then you lose your account, right? So it's better if you want to make a lot of money, it's better if you trade 0.1 lot size, right? And then you manage your risk by calculating how many pips will I lose per trade. Of course, you'll use the formula, and yeah, that's how you trade it. let's take that example here. Let's say you have $50, right? So $50, again, it's let's say per pip 0.001 divided by the exchange rate. Let's say the exchange rate is about 1.079. What happened? Okay, so it's about 1.07987, right? And then times, let's say you are trading 0.1 lot size, that's 10,000. Let's put that on our calculator. So it's 0.001 divided by 1.07987, then times the 10,000, that's 0.926, right? Just gonna leave it there. So per pip, you'll be making or losing that amount, right? Let's say you had $50, right? You had $50 and the price moved 70 pips, right? It moves 70 pips against you, right? So if it moves 70 pips against you, then answer times 70, then that's 64.82, right? Now look at that. You will be, if it moved in your favor, then you will make that amount, right? You will make that amount of dollars. But if it moved against you, you'll lose 64.82. Now look at this. You are losing more money than you had, right? But there are some brokers that will allow, that has a negative balance protection. But if you using a broker without a negative balance protection, then that means that you will be owing your broker, right, about $14. You'll be, I think that's 10, that's 6, 1, that's 4, yeah, about, probably that's 5, about $14. So you'll be losing, you'll be owing your broker about $14, right? If your broker doesn't have a negative balance protection. But if your broker has a negative balance protection, then they will close all your profits when it reaches $50, of course. When the thing, it won't fully reach the 64, right? It won't fully reach the $64. They will take you out the minute it goes to negative. The minute it goes to negatives, you will see there on the screen, you will have red numbers. When you see those red numbers, you already know that your margin level is super low and the broker will take you out, right? It won't even take you out at negative 50. It will take you out less than that, of course, right? So yeah, that's leverage. I hope that you understand the leverage and how it affects, or how it can affect your trades, and how you can also make more money out of leverage, right? And yeah, that's it for this one here. On our next video, we'll be looking at some what we call your stop loss and your take profit, how you can manage not losing a lot of money, and yeah, and how you can create your own trading strategies, your reward to risk ratio, your psychology, and so on. There's a lot of things that you have to know about Forex, right? There's a lot of things, right? It doesn't just end here. There's a lot, right? I'm just going to end it here because I think that this is a long video as it is, and I don't want to bomb your head with a lot of information. Just keep these on your notes, study these information, read, do activities, know how to calculate your pips, know how to calculate how much or how many how much you're losing per pip, or how much you will make per pip if you're using certain lot size or some lot sizes, and so on. Yeah, that's it for this video. I'll catch you on another one. Please go ahead and try these activities, create your own activities and your own scenarios, and use the information that I've given you to calculate or to make scenarios out of it, right? And I'll catch you on another one. Cool.